3, 2, 1.
All right.
Welcome to the show, everybody.
It is August 1st.
Sunday. It's August already, man.
Sunday, August 1st.
It's going to be back to school time any day.
I know. That's all I ever hear about in the news, right?
Yeah.
Of course, with respect to the Delta variant and
Oh,
who's going to wear masks and how old you got to be to wear a mask or not wear a mask. Mask.
Yeah. We're definitely living in some crazy times.
I read a thing this morning. There was a couple of gatherings or whatever in July in Barnstable, Mass. on the Cape.
Mm-hmm.
And apparently 75%, it was a huge uptick in COVID, right? 75% of the new cases were from people that have already been vaccinated.
Yeah, it's crazy.
Insane.
I know. I've honestly just stopped, trying to keep up with all the differences because there's always so many conflicting narratives, and I know probably somebody listening to this right now just got triggered. Or something, right?
Yes,
somebody just like, oh, but that's not true. It's 75. And I'm like, it's just an article, man. It's okay.
Yeah. I'm just reporting the news. I'm not making the news.
Right. Yeah.
Yeah.
I don't even know what side to be on, and I don't even know if there is any sides. It's like every side's.
I know.
All right, let's not go down that road.
Well, we're going to come back to it a little bit, actually, because that was.
Because a lot of people think it's impacting the market, and
yeah.
It has to be, right? I mean, that's obvious that if things do impact it, we just don't know exactly how or why.
And when and why, yeah. So, we're going to get to a little
what
bit
do you
more
got
of
for
that
us this week? Let's move past masks.
All right. It was another volatile week that ended mixed. So ordinarily, we see the CNS leading the INF, but this week we got both the CNS down a little bit and the INF both up a little bit. It's just a snapshot, so it doesn't really mean a whole lot, but if you're just walking around the water cooler and going, the CNS always outperforms the INF, well, it didn't this week. Okay. So what are we going to talk about? What happened on the market this week? We're going to stay with the intraday charts because I think they're pretty good. I'll put up last week's intraday chart of the C fund, and then we'll just extend that chart by a week, and we'll see what happened this week as compared sort of to last week. Then the Facebook question of the week actually has to do with masks and COVID and all that.
Somebody's going to make fun of us for that because we spelled Facebook wrong. It's not two words.
It's my smart computer telling me I got to do that.
I was going to say that was probably an autocorrect or something.
Yeah. Facebook question, not Facebook.
That's
Facebook.
That's like a grandpa move right there. Gonna go to the Facebook.
Do you have a Facebook? G Fund. We talked about that last week when we did the G Fund rabbit hole. But this week, we're going to talk about two things that are not really arguable in terms of what we usually talk about the G Fund, their legislation and how that affects the G Fund. Bonus chart, I'm calling it Grayscale Bitcoin Trust. I'm calling it the bonus chart again, but there's going to be a lot more to it actually this week. And then we'll get into the 18-month weekly charts real quick. Okay, so what happened this week? This was actually last week, and if you remember, we finished last week pretty much at a top. We had a really nice run throughout the week. Higher high. Monday, this was Monday right here. So we did have a lower low, which is not good, but we finished the week with a higher high. So we're still in good shape. So here we were at the top last week, and this is what happened this week. So the only reason I'm really putting this one up is because of this. We want to see impulse moves, which we talked about last week or the week before. An impulse move can go in either direction, and it's 5 legs on the Elliott wave, right? So impulse goes for 5 legs, and corrections go for 3 legs, right? So if you look at this, we had a big move, and let's call it a 1. So what we would, and this is a 2, right? So what we want to see is 1, 2, 3, 4, 5, right? For 3. Because we want to see ultimately this being an impulse wave. Unfortunately, we got the 1, 2, and then we got A, B, C, which means this is corrective. This piece is corrective, which is fine. But this is a problem, because what is more likely than not to happen, at least intraday, is a 1, 2, 3, or a 1, 2, 3, 4, 5, which would be an impulse down, which is not what we want to see. So, and on a short-term basis, next week, ideally the C fund does not get below that low. But we'll see what happens.
And this is really like zoomed in, right?
Way zoomed in. This is one month.
I try to always keep perspective on charts, because a lot of people that are watching us don't, they're like, I would initially just look at the chart and not look over the left-hand corner where you have, that's 1 month, right? Right. So always perspective. This is like as really zoomed in. Yeah,
this is as zoomed in as you can reasonably do, and I only use it for perspective, so that I sort of have an idea of what I'm looking at going into the next day. Okay, so that's what happened last week. So, Facebook.
It's all the way through here.
It must be auto.
Your PowerPoint loves you right now.
Well, it's IT, and no IT loves me. All right, so this was a good question, right? Is now a time to pull out of the CNS funds and go into the G fund with another lockdown looking to happen? So all we heard all week in the news was Delta variant, COVID. We got more states doing lockdowns. It looks like the administration doesn't want to come out and do a nationwide lockdown. We didn't do a nationwide lockdown before, right? It was state by state. And it still will probably be state by state. Not Amazon. Walmart came out, and a bunch of other companies came out and are making their employees wear masks, whether they're vaccinated or not. I mean, the lockdown, quote unquote, is coming. It's just coming in a different way than it came the last time.
Right, just looking a little different.
Everybody's
hesitant to do anything either way.
Right.
Because no matter what you do, you're wrong.
Yeah, right.
Right. This is a time when I would not want to. I'd never want to be a politician. But if I was ever a politician, I would not want to be now, because you're going to be wrong.
Yeah,
I don't care what you do.
Definitely. Yeah, I mean, like the governor of California or Florida may as well just hibernate right now, because they are hurting down there right now, and he absolutely refuses to do any kind of masking legislation or whatever.
My oldest daughter came visit from Arkansas, like right when they were getting hit with this. Like Florida and Arkansas were like the highest, and she's a nurse, and she was trying to explain, how things were there, and it's just it's amazing. But So to say, is it or is not impacting the market? Obviously, it has to impact it, right? There's a whole lot of fear and confusion going on right now, which sometimes can be very good for us in the market. Other times it's not.
Yeah,
and so you just have to see how it plays out in the charts.
Right. So if we go back to last week's chart, right? This was the week before, and obviously, 2 weeks ago, we still had the same kinds of fears, and it's been ramping up. But 2 weeks ago, it didn't seem to affect the market, right? This week, did it affect it? I mean, we still got higher highs,
right?
Until the end of the day on Friday. But that the answer is, we won't know whether or not it's going to affect the market until the market tells us it's being affected.
Until it actually happens.
Yeah.
And that's one of the great things, I think, as I've learning more and more about technical analysis, that's what it is. I mean, it's human behavior. Pricing is, right? And so it's a real-time exposure to what people's behavior is. Yeah. Right? Yeah. And so if you're watching it, you'll see it, but it has to happen first.
Yeah, if it doesn't happen, how will you know? I mean, of all the things that go into whether or not the market goes up or down, fear about coronavirus is definitely one of them. Mm-hmm. And it's only one of them.
Right. Yeah. Right.
So if we go back to the question, is now a good time to go to the G fund? It is if it makes you sleep better at night.
Right. That's the key.
Right. The best answer I saw.
Oh, this was your answer.
Oh no, my answer is better than this answer, but not really. This is actually better than mine. It's a good time to drink a bourbon and not worry about it, because. And the reason I said it's the best answer is because you worry about it when the market tells you it's time to worry about it. Right. At least that's my perspective. That's the way I do it. I can sleep fine at night knowing that all this fear is out there and doom and gloom and stuff until the market actually does something.
But you can sleep well at night because you have your lines in the sand drawn, regardless of why they happen.
Right.
Right. I think that's the takeaway that a lot of people that get that really get a lot of anxiety, and I know a lot of our members still do, even if they're following us, because you can't help it. It's human nature, right? I mean, you get that anxiety about what's going on in the market. The only thing you can do is draw your lines in the sand. Know when you're going to make your moves. Whatever makes the market do that, take action then. Right. It doesn't matter why. It did a thing.
Or it didn't do it. Yeah.
Right. It did a thing, and you had your lines drawn, either get in or get out.
Yep.
That's
and you respond to the... Yeah.
And then you don't have anxiety because you're like, no, I know exactly what I'm going to do when it does that, regardless of why it did it, whether it's a tsunami, whether it's
COVID,
Delta,
whatever it is. Yeah. So one of the things we're going to talk about on the newsletter this weekend is seasonality, and because it's the first of the month, what is a good sort of basis for going into August and September, October? These are a lot of times the most volatile months of the year. So I pulled up a bunch of charts, a chart of the seasonality of the C fund, and then seasonality of the C compared to the S and the I and the F, and it's pretty interesting. It gives you a bias, right? So, for example, it's in the newsletter, but every November for the past 10 years, the C fund has finished higher than it started. By the end of November, it was higher than it was in the beginning of November. Every November for the past 10 years. Doesn't mean this November it's going to be higher. Right. But the bias is, hey, if the chart's telling me I'm going to be in the stock funds, and it's November, and the market does dips below the 10-day, I might give it another day in November, right? Because the bias is bullish. Right. If it's if the month was only 20%, C fund finishes higher, then I might not give it that extra day, right? Because I would have a bearish kind of bias, right?
And just as a heads up, I don't think we're doing it this week, but we've gotten. I'm just kind of putting this out there because I want to get some comments from our members. What Jerry's going to start doing on the weekly newsletter. So it's been it started off as an actual newsletter, PDF back in the day, right? And then it was an email, and then kind of it's evolved to be on our website, right? It's still in written form. And so a lot of folks have a hard time sometimes, reading it and kind of grasping it the right way. So Jerry's actually going to kind of talk through the newsletter in a little video snippet on his own for those, like me, who are slow learners and kind of need him to kind of talk through it as opposed to just reading it. It won't be, it won't be a whole nother show or anything. It's just going to be Jerry kind of, quickly going through it. But we hope that it's going to, get some feedback that people like both. So think about that. If you're a member, let us know what your thoughts are on it. If you're not a member, you're going to be missing a lot of good analysis because when you add a little video snippet to what Jerry's already doing in the weekly newsletter, man, that's just a lot of value because, we get into a little bit here on the show, but if you're not a member, you don't see the actual newsletter that goes out that really dives deep into what's going on, what we think is going to happen, how things are going to play out. We barely just touch the top of it in this show.
Right. Yeah. Yeah. No, I think it's going to be a good add-on. Okay. So yeah, pour yourself a drink and don't worry about it until it happens. Okay.
I like that advice.
The G fund continued only because we talked about it last week. This week it's different. So budget politics, the debt ceiling, government shutdowns, all this kind of stuff enables the government to utilize funds in the G fund. And it's called divestment. It happens the most around debt ceiling time, which we're kind of rolling into right now. But debt ceiling use of the G fund through divestment is what it's called. So it's relatively rare. They say it's relatively rare, although they use this tool, let's call it, from 95 to 96, 2002, 2003, 2004, 2006, 2011, 2012, 2013, 14, 15, 17, and 18. They use it a lot. And so the idea is that after the debt limit impasse has ended, the G fund is made whole, right? That's what this is a statement from the Department of the Treasury. So after the debt impasse, the debt limit impasse, so whether it's the debt ceiling or a government shutdown concern or passing budgets for the next fiscal year, once the impasse is ended, the G fund is made whole. So therefore, participants in the TSP who contribute to the G fund are unaffected. A TSP statement similarly said that G fund investors remain fully protected and G fund earnings are fully guaranteed by the federal government. The statutory guarantee has effectively protected G fund investors many times over the past 30 years. G fund account balances will continue to accrue and will be updated each business day, and loans and withdrawals will be unaffected. So what they're telling us is, don't worry about it. We have this pot of money that we're using as a credit, basically, in the big spreadsheet, big government spreadsheet. But once the dust settles from the impasse, the funds go back, get recredited back to TSP. Regardless of that, TSP investors in general really do not like when the government does that, because we TSP investors see the G fund as our money, our personal money, and not a government trust fund, which is understandable. But the idea is that they're going to continue to use that bucket of money, but we're going to continue to have it returned to us. So I'm not too worried about that. There's always talk about that every time it happens. That doesn't really concern me. What really concerns me is the next one. So let me just read let me do this. One of the headlines, if you Googled G fund rate change or legislation to change the G fund or something like that, Google anything like that. This is one of the titles that came out that I was looking at. House proposal would make the G fund virtually worthless. This was a pretty good Washington Post article from 2015. We ordinarily only see this in a Republican administration, and it would probably never pass. The only possibility it would pass is if you had a Republican House, Senate, and White House, because this is a big one.
Yeah, we kind of lost that opportunity for a while.
Yeah.
So it's not something to really be concerned about, but it's something that everyone should be aware of.
Yes, definitely,
right?
definitely.
Because these sneaky little changes can come in, and it's definitely more likely than not to happen during a Republican administration, but it could sneak through for some crazy reason.
Good.
While you're not watching, and if you're not paying attention to this will effectively, it would make the G fund worthless to us compared to what we're using it for now.
Right. Yeah. So let me just read this thing that my notes I put up here. So, a report from the House Budget Committee. This is back from 2015. A report from the House Budget Committee says securities within the G fund are not subject to risks of default. Payment of principal and interest is guaranteed by the U.S. government. Yet the interest rate paid is equivalent to a long-term bond. As a result, those who participate in the G fund are rewarded with a long-term rate on what is essentially a short-term security. It projects that dropping the interest rate, it projects that dropping the interest rate the G fund pays to match short-term rates could save up to $32 billion over 10 years. So what that means is, right now, the G fund tracks basically the 20-year Treasury bond. Okay, so if you were going to buy a 20-year Treasury bond, you would give the government your money and they would have it for 20 years, and you would get a certain interest rate. We get that in TSP, but we have the ability to move our money in and out of TSP every day. So what the legislation is saying is that since we have the ability to move it in and out every day, we should be paid a rate that's equivalent to that risk level. And we're getting a way higher rate in the G fund than you would on like a 3-month Treasury bill, which is what they're talking about moving this thing to. So if you look at a 3-month Treasury bill right now, I mean, now the 10-year rate is like 1.25. It's really, really low.
Yeah. This effectively would be like what we have in our IRA.
Right.
Where
savings account. It's just like zero.
It's as little to close to zero as you can get.
Yeah.
That would suck.
So, G fund rate right now, say it's 1.25%. I'm not sure, something like that.
Yeah.
Which is not very much. But on a percentage basis, it's a whole lot than it would be if it was like 0.25%.
Right. It's a whole lot more than zero.
Yeah. I mean,
especially when you have a big bucket of money in there.
Right.
Right. We talk about TSP millionaires all the time, and the number keeps growing of people that have $1 million or more in their TSP account. Yeah. When you have $1 million in there, 1 or 2 percentage points.
It's a lot.
It means something.
Yeah.
Right?
Yeah. Without a doubt.
If you're parking it in the G fund for safety reasons or comfort, I'm going on vacation, I want to park my retirement account in the G fund. It's nice that it's still growing a little bit.
Yeah.
You know? Yeah.
Yeah. I mean, for our purposes, we were talking about it before. For our purposes, we use the G fund as a placeholder when we're not in the stock funds.
Right.
Right.
So it's not a huge impact because we're in and out of it.
Right.
Right. But if you're parking it there for a while because of you want, to sleep well, like that's going to make you sleep well because you're like, hey, I don't want to lose anything.
Right. Right.
Then
so the worst is if you're a retiree, say you're a $2 million TSP, lottery winner, you got $2 million and you're like, you know what? I don't want to mess with this anymore. I'm going to stay in the G fund because I know there's no risk, and I'm going to set up my withdrawals monthly or whatever, and you figure all that out. As the G fund rate continues to go lower, you're going to have to adjust how much you take out because it's fixed income.
It's going to slow it down a lot.
Yeah. And the other, I'm not going to get into it, but another piece of legislation that was coming out is to put a cap on the G fund rate. So it's at some point. I mean, I think the 10-year average on the G fund is like 4% maybe now, because it used to be, 10 or 15, maybe 20 years ago, it was like 8% on the G fund. I mean, it was really good, really, really good, and it's been consistently going down for decades. I mean, it's to the point where it's, if you're listening to the news at all, they talk about a negative interest rate. That's, that can't happen on the G fund.
Because of law.
Right. Yeah.
But it could if they changed that rule.
Yeah.
That's the difference. Yeah. So you definitely want to keep your eye on it. And these are one of those kind of things where, like, I would hope as a group, with 6 million plus people in the TSP, we wouldn't allow it to happen because all of us would call our congressman and say, a congressperson and say, hey, no, do not vote for this. Right. But you just have to keep paying attention. That's the key.
Yeah. I mean, none of this is anything to worry about in terms of what am I going to do to reallocate next month or whatever, but it's definitely something to have on your radar.
Yeah. And we've been talking about the G fund, so we might as well talk about, all the pieces that are involved.
Yeah. This is the one piece that worries me in the big scheme of things the most.
Yeah.
So, but not until we get another Republican House. That's really the thing. Okay. Calling this the bonus chart again, Grayscale Bitcoin Trust, but I'm going to add a little technical analysis piece at the end of it. So if you guys remember last week, I said I bought Grayscale Bitcoin Trust, and usually Conan interjects here, and I'm gonna do it for him. This is not a TSP, not a TSP related.
There's a disclaimer.
Disclaimer. So the only reason we do these bonus charts is to kind of, as an example of technical analysis and how you could use it in your brokerage account or whatever. But obviously Grayscale Bitcoin Trust, much as I would love to have that option in the TSP, it is not there. So I went over real quick last week the reason that I bought in here at 25.65, and I basically said what I saw was 1 A B C. This is 1 A B C for 2, 1 2 3 4 5 for 3, 4, and I called this 5, and we had an uptick, so I bought it. If you look at this, okay, well that's why I bought it. So what happened over the course of the last week? We had a huge move. So I bought it in here at 25.65 or whatever, and it's up to 34.74 right now. It was a huge move for me. Great. Why I did it, I just explained, right? And I said last week that the first target would be right here, and the second target would be right here, and it blew through both of those targets this week, which is great. In the bigger scheme of things, the reason I was showing this, and the reason that I bought it here, so if you go, okay, I'm following your Elliott wave thing, right? In the big scheme of things, you got 1, A, B, and then A, B, C, right? So for 2. and you got 1, 2, 3, 4, 5 for 3. And then you get a 4. Okay, that's how we got to that point. Now we're looking at the fifth wave, right? Fifth leg. 1, A, B, C for 2. 1, 2, 3, 4, 5 for 3. So we would expect a 4, 5.
And
we didn't get that.
Didn't get it.
So why did I get in when I did? I was expecting a 4, 5, but we had come down. We already talked about the retracement levels. We had a high here of 57.50. We're down more than 50%, right, in here. So if it was 60, it would be 30. So we're more than 50% down from the high. We know that that's generally the 50% area is when most people throw in the towel and say, that's it, I'm out. Nobody had been talking about Bitcoin for the last couple of months, really, because it had been tanking, and it wasn't really on the news. You got really low volume down here as the price kept going down. So basically, there's not a lot of action going on in there. So it may not have been the bottom, but it was close enough to the bottom that I was willing to. So if it had continued, if this was the 4, and it did continue to come down to a 5, I was okay with getting in here, absorbing this loss a little bit, and then letting it come back up. And the reason I was willing to do that is because of this.
And this is S&P 500.
This is the S&P 500, the top in 2007 to the bottom in 2009. So when we talk about how these charts all look the same and it doesn't matter the time frame, I mean, this, if you forget about this part of the chart looks just like this part of the chart, right? I mean, it's the steps are all there. You got 1, 2, 3, 4, 5. 1. A, B, C. 2. 1, 2, 3, 4, 5. For 3. A, B, C for 4. And you get 5. So back in 2009, we talk about it all the time. I got out. I got out somewhere in here. I don't remember exactly, but it was somewhere in there. And I was looking for, I'm watching this count. I'm doing the L8 wave count. And I get down here. It's the bottom of the 3. Great. I see the 4. Awesome. 1, 2, 3, 4, 5 is what I'm expecting. And I'm standing by, ready to get back in, right in there when it hits the 5. Guess what? There's no rule that says the fifth wave has to play out in 5 legs. The only rule is this 5 has to go below this 3, right?
That's really the only rule.
That's the only rule.
No, you can expect it to,
Right.
keep going down for a little bit more because that's kind of like, a higher possibility.
Right.
It's not a rule.
But it's not a rule.
Right.
So the bottom line is I didn't get back in at the bottom in 2009 anywhere near as early as I could have. And I've been waiting like years for a similar kind of thing
to fix that.
Yeah. And I think I relatively effectively fixed it, at least in my mind. So if we're going forward,
because where did it go? So we know where it did, but it doesn't show it on the chart. Where did the C fund go from there?
Oh yeah, it's off like a rocket, right, and never looked back.
Right. So don't know if the grayscale Bitcoin's going to do that, but it's on the way. It's at least right now. Now. So that's what it's telling us right now.
To your point, right? This could be 1, 2, 3, 4, 5.
Mm-hmm.
We could get that.
Yeah, we're looking for it. We're watching.
Yeah. It's if it rolls over. I mean, for me, like we've already gone above this was a pretty good target. If it got below 3250, I would probably consider getting out of it. Just because I have this huge move and I don't want to waste. I don't want to give it back.
Exactly. I don't want to give it back.
I got it. I don't want to give it back.
I want to keep it.
So well, maybe we'll dig a little deeper.
3250 right now is my line in the sand.
Yeah. For a lot of reasons, right? You got this low right here. just above 3250, and you got support here. So we should stay above it. If we don't stay above it, I would be kind of concerned. I mean, if we came down to here, say a 50% retracement like that, and it popped higher, I might get back in because you're 1, 2, 3, 4, 5, hopefully. Right.
That's kind of what I'm looking for. Is that last example?
Yeah, I kind of am too. In the big scheme of things, maybe we'll do this next week, but in the big scheme of things, this whole breakdown right here should be a 4-leg, and this should be the beginning of the 5th leg up for Bitcoin.
We just got to let it play out.
Yep. Okay.
So hopefully you guys got something out of that.
Yeah.
Yeah. I mean, the whole point here is, as Jerry said, is trying to give you guys different perspectives. And one of the ways that we've gotten feedback is just to not always do the same charts. Yeah. So you have to go find something else. And it's nice to find something else that you're actually doing yourself. So you're interested in it or whatever. And, we play around with crypto, probably for different reasons than the mainstream media gives us. But the chart's a chart.
Yeah, the chart's a chart. The good thing about crypto, kind of to your point, there's a thing called beta, which is a measure of volatility. So if you can see a chart of a stock or a fund or whatever that you understand, and the chart makes sense, and it's doing what you expect it to do, you can ride that chart, for as long as it'll play out for you. And the more volatile it is, the more money you can make. So Bitcoin,
as soon as you wrap your head around a chart, like you see it and understand it, like a particular security,
right?
It's it, right? And once you're kind of in the groove, and hey, like I see this 4-leg, I see this, like stay with it,
yeah, because
now you've found one that you understand, and that's half the battle. Right?
Yeah, definitely. Well, that's why
we hope that the CS and I and F are ones that you're wrapping your head around, but they're a lot less volatile. So sometimes it's hard to see these big moves, right? And that's why we're kind of using Bitcoin, is because it's more volatile. It's funny. I was having a conversation with a buddy of ours yesterday about this, and like one of the reasons why he doesn't like it is because it's so volatile. And I'm like, well, it just depends on how you look at it. Yep. Like I don't like volatile securities either, but in this, and there's a lot of underlying fundamental analysis reasons I'm looking at crypto, right? But I don't make my decisions on buy or sell based on that.
Right.
I make it off the chart, right?
Right.
But I understand that in the bigger picture, right, the macro level, there's a lot of fundamental reasons to be watching crypto, and not just the currency, but just the technology, blockchain, and all of that. Yep. Like it's like being in. I always say it's like watching the internet in 1993. Yeah. Somewhere in there, right? In the early 90s, I remember people like, email, great. We're not going to have the post office anymore, right? But if you really understood what was going on, you're like, no, this is about to change everything, right? I mean, now we can do banking on our phones and like all this crazy stuff that wasn't, it wasn't even a possibility. That's where we're headed with all this blockchain stuff. Like there's stuff that we don't even know is going to happen in the next 10 years. Yeah.
You know what's great now that we can do that we couldn't do back then? Now there are companies creating ETFs around those ideas.
Right.
So like there was no way to make money on the internet. So even if you saw that the internet was going to be this huge thing, was going to revolutionize the world and all that.
Yeah, this is a very good point.
Yeah. How do you
what
can
couldn't
you
leverage
buy?
it? Yeah, there wasn't anything that you could go out. I mean, the only version of that was going out and either starting a company related to the internet, which is what I did.
Yeah.
And then I didn't start it. Another guy started it, but it was part of it. Or you invest in a company, buy shares in a company that like it wasn't like you could.
Like Cisco, right?
Yeah.
You could have bought Cisco
exactly.
Or, things like that.
That was the best you could do.
Right.
Not like now where people are creating ETFs around it early on where you can say, okay, now I can get a little chunk of this, but I don't really have to buy that company.
Right. You actually can't buy a Bitcoin ETF yet.
Yeah.
But there's a ton of ETFs that are just about to launch, and they're everything from like blockchain. I mean, this is some of the ones I'm looking at for sure is the blockchain ETF, because I mean that's like buying the internet in 1993.
Exactly. And what you have to watch then is you have to watch and hope that it's well managed, right?
Right.
What's their methodology? How are they manage the ETF? Because the ETF is just a collection of things. So how are they reallocating and all that kind of stuff? It's fascinating if you're into this stuff.
Yeah.
We're definitely on the edge of being able to I'm going off a little off track a little bit, like I always do. But I was watching the IPO for Robinhood.
Yep.
And I've got mixed feelings about Robinhood and some of the things that have happened recently. But the bottom line is what they're doing is, in effect, democratizing the financial industry, where the average person just could not get in the game at all.
Right.
And so there's a lot of risk associated with being able to do that. But at the end of the day, if you're anywhere in the world and you've got a mobile device in your hand, you're in the financial industry now. Yep. And that's not possible. That wasn't possible. That wasn't even
you had to go to your broker.
Yeah, and now you're taking out so many layers. It's changing everything. So I got to give them props for that. Yeah. And not that we're trying to be Robinhood in any way, but it's kind of like what Jerry and I have kind of set out to do for public service folks, right? So military and federal, federal government, you guys, us, TSP holders, because we've never been able to play the game. Very much because we can't use a broker to manage our TSP account. We can't do some of those things, and if you don't have a high enough balance, nobody's giving you the time of day anyway, right? We just talked about that, where a buddy of ours, he got a big chunk, what he thought was a big chunk of money. Yeah. At one point in his life, he sat down with a broker, and they were like, unless you got $500,000, brother, I got no time for you. And you're like, I got to have $500,000 before I can get your attention. Yeah. That's not most government folks, right? We didn't get in it. We're not millionaires. So anyway, that struck me as we're just in the beginning of all this, right? It's fascinating.
Yeah, there's a lot to look at. If your eyes didn't completely glaze over from the conversation we just had, go Google around a little bit and look at Kathy Wood's stuff and ARC. The
bottom line is we're able to get in the game now where we never could before, and that's dangerous. It's risky.
Yep.
That's why they never let us do it before.
Right.
So hopefully we'll prove them wrong. Yeah. That the average person can actually get in the game.
Can do it. So like what we're saying is along the same lines of what I'm talking about in the newsletter this week in terms of seasonality and the bias that you would have coming into the month, depending on whether or not the C fund has more up months over the 10 years or whatever. If you think that Bitcoin and crypto and blockchain are just in the infancy, the bias is bullish. Great. You still go back to the chart, because even though my bias was bullish, I don't want to buy Bitcoin at 65,000 and now it's down to 30,000. Right? I still lost half my money.
Exactly. Yeah.
So the chart still, for me anyway, the chart kind of rules the day. All right.
Back to the charts. We're almost done.
C fund has been this is a 18-month weekly chart. So if you're only looking at your TSP every week and you're doing it along with the show, awesome. We got almost every time the C fund hits the 10-week moving average. Let me make sure I'm putting this out right. Yeah, the red line is the 10-week moving average. Almost every, which corresponds roughly to the 50-day moving average. Every time it hits that 10-week moving average line, it gets support, except for 2 times back in here. So until we get a break through this red 10-week moving average line, there's no reason not to be in the C fund. Whether or not the Delta variant and the kids wear masks to school and all the rest of it, as long as the trend continues to be up, and we continue to get support here at the 10-week moving average line, there's no reason to sell the C fund if you're on a weekly basis. S fund, it's the same kind of thing. We've been in this sideways consolidation. At some point, it's going to go one way or the other out of that consolidation. So if you're holding in the S fund, great. I wouldn't be looking at selling it until it broke down through the bottom trend line. Because it's a serious support level right here. If you're looking to buy it on a long-term basis, I wouldn't buy it until we get clearly outside that channel. It's pretty straightforward on a weekly basis. It's easier than on a daily basis. I fund is kind of similar. I mean, we've had one dip here off the bottom from post-COVID, had a nice run, had one kind of a dip, big run higher, and now we're in this consolidation. So does it pop higher from here, or does it go down? If I'm sitting in the I fund, I'm not selling it, and I'm not necessarily buying it here either. F fund, I mean, there's no, if you're in the F fund and you're a fixed income person, let's say you're if you were in one of the L 20, 25, 20, 30, something like that, you're going to have a lot of exposure to the F fund, and you're doing really well. Until the F fund breaks down below that 10-week moving average line, I would ride it out in the L fund, or in the F fund. The indicators look great, right? You get RSI still trending higher and still has more room because we haven't gotten overbought yet. You get the cross that happened back down here in May on the positive side, and MACD and everything is still trending higher. No reason to sell the F fund at this point on a weekly basis. All right. I think that's it. Questions?
It works better if my microphone's on. So, pretty good show. It was actually pretty quick show.
Was it?
Normally when we get a lot of chatter back and forth, we're at about an hour, but we do try to keep it below an hour just so you guys can watch it and consume it and get on with your day.
Yep.
If you guys like what you're seeing, please share it with your friends. Give us some comments. Give us some questions. A lot of stuff that we get is from our Facebook group. Just because there's like 12,000 people in there, there's a lot of stuff for us to kind of go through. But you don't have to use that to get through to us. You can email us and shoot us some questions. You can always put it in the comment section of the YouTube video or wherever you watch this, however you get our podcast.
Yep.
Hope you guys have a great week, and we will see you soon. Don't forget that we'll be doing Facebook Lives periodically. We're also putting together a series of Facebook Lives to show you how to put together a chart. That's going to be a fun thing. We'll give you guys a heads up before we do it. And I think that's it, man.
That's it.
Ready to rock and roll?
I'm ready.
All right. See you guys.
All right.